Hey, welcome back everyone. This is Uncle Frank, and I am not a financial advisor, nor is any of the content to be construed as financial advice. This channel is for entertainment purposes only. Okay, let's start this episode with the financial media's take on what's been happening in the market. We'll start with Wall Street breakfast. The benchmark S&P 500 on Friday fell about 1% for the week, underscoring a tough February overall for markets. The enthusiasm that swept Wall Street after Donald Trump's election victory last year and inauguration last month has waned in the face of uncertainties caused by the U.S. president's tariff moves, along with data that has pointed to sticky inflation and a slowdown in the economy. Now let's check Uncle Frank's headlines. Number of Americans filing for unemployment benefits rises to 242,000, highest level in 3 months. That's from Thursday. And then from Friday, inflation eased. Why it isn't a sign of relief for the Fed or consumers. No, of course it can't be. You see, if inflation went down, then we could cut rates. I mean, the Fed's mission is to promote the stability and efficiency of the U.S. financial system and economy. The Fed also aims to promote maximum employment, stable prices, and moderate interest rates. The market, the president, we all want a rate cut. The Fed's not going to do it. That would help Donald Trump. Also last week, personal income posted a much sharper increase than expected, up 0.9% on the month, against expectations for a 0.4% increase. However, the higher incomes did not translate into spending, which decreased 0.2% versus the forecast for a 0.1% gain. Notice we're not blaming that on higher prices or inflation. The personal savings rate also spiked higher, rising to 4.6%. The most recent GDP report for the United States was released on Feb 27th and covers the fourth quarter of last year. The report shows that the U.S. economy grew by 2.3% in the fourth quarter. So let's review. People filing for unemployment at a 3-month high, right? Inflation eased. That's PCE. GDP is up. Personal income is up, but spending is down. And the consumer is saving more. But we're not going to cut, are we? Now, I should mention that the Fed does not want to lower interest rates, help out the consumer, help the economy, the market. Certainly doesn't want to help Donald Trump, help out housing, but he definitely doesn't want the Fed audited. Fed chair sees Elon Musk's audit push as a threat to the central bank's existence. This is basically saying, if you look at my books and activities, you will destroy the central bank. Congress tasks the Fed with managing the nation's monetary policy with the two goals of keeping inflation low and employment high. The Fed does this mainly by changing the Fed funds rate, which influences interest rates on all kinds of loans throughout the economy. Powell argues the Fed must make monetary policies without interference from politicians because presidents would likely be tempted to push the Fed to adopt low interest rates. That would boost the economy while they were in office, reaping short-term political rewards, but raising inflation risks in the long run. This is from the guy that called inflation transitory. Yeah, I think I'd like to audit the Fed, Jay. The lady doth protest too much, methinks. Elon Musk, in a post on his social platform X, appeared to back conservative commentator Charlie Kirk's suggestion that former Representative Ron Paul replace Jerome Powell as the chair of the Fed Reserve. Quote, "Great idea," Musk replied on X to a statement from Kirk saying Paul would make a great next chairman of the Fed Reserve. I would agree. Also, one of the biggest events of last week was chip giant Nvidia's quarterly results. The company's blockbuster earnings over the past 2 years have turned it into the world's second biggest firm by market cap. Despite strong fiscal fourth quarter results, the stock fell more than 8% in the wake of massive expectations. Okay, so Nvidia killed it, top and bottom on earnings, but it was our massive expectations that took the stock down. It couldn't have been anything else, right? Check. Okay, stick with me, guys. Also last week, tariff drama continued to dominate headlines. Trump confirmed that previously delayed 25% tariffs on imports from Canada and Mexico would indeed go into effect in March, along with an additional 10% tariff on imports from China. Trump also met with Ukraine President Zelensky at the White House to discuss efforts to bring an end to the Russia-Ukraine war and sign a minerals deal. However, the meeting turned heated, and Zelensky was seen leaving the White House with no deal signed. Now, here is another thing Wall Street Breakfast is not mentioning. Apple to invest over $500 billion in American tech economy. Apple to invest $500 billion across U.S. operations. Apple to invest more than $500 billion in U.S. manufacturing. Why Apple just announced a $500 billion investment in the U.S. So Uncle Frank will tell you, you see, guys, that's why Trump uses tariffs as a negotiating tool. It's an effort to negotiate better trade deals for our country and get manufacturers to repatriate their factories to U.S. soil. These are the things the liberal media hates because they produce results. What else can using tariffs as a negotiating tool do? Don't forget, about 22 high school age adolescents died each week from overdoses in 2022, driven by fentanyl-laced prescription pills. Those chemicals come from China into Mexico. The fake opioid pills are manufactured in Mexico and then smuggled over our border. Another headline: why has Mexico handed over drug cartel leaders to the U.S.? Who are they? Mexico's largest handover in years comes days before Trump imposes tariffs on Mexican goods. Mexico has handed over 29 drug cartel figures to the United States, including one of the FBI's most wanted, Rafael Caro Quintero, in what observers say is a show of compliance by Mexican authorities. The handover comes just days before 25% tariffs on Mexican imports by U.S. President Donald Trump are due to come into effect. You see how that works, guys? It can be pretty effective, can't it? So now let's finish with Wall Street breakfast conclusion. The January core personal consumption expenditures price index reading was another highlight of the week. True, the metric widely seen as the Fed Reserve's preferred inflation gauge came in line with consensus estimates. Okay, and how did CNBC cover it? Fed's favorite core inflation measure hits 2.6 in January. Like it hit an all-time high, as expected. Again, we came in line with expectations. Now, here's the truth. Here's Uncle Frank's headline. On a year-over-year basis, headline PCE inflation eased to 2.5% from 2.6%, marking its first slowdown in 4 months. Similarly, core PCE inflation declined to 2.6%, its lowest level in 7 months, from an upwardly revised 2.9%. Guys, face it, anything that will help the president, help the markets, help the economy, these people will ignore it. They will subdue it. Anything that adds fear, uncertainty, and doubt into the market, these people will accentuate it. Now, stick with me, guys. I want to show you how the elites, the one percenters, the deep state, how they can take down a stock market. This article was from February 1st. Hedge funds' massive bet on stock market crash raises alarm for 401ks and risks ire of Trump. Hedge funds are making a multi-billion-dollar gamble against the U.S. economy, betting Donald Trump's presidency will result in a massive market crash that could devastate 401ks, pensions, and household savings across America. Data from Goldman Sachs has sent shockwaves through financial circles, revealing a dramatic surge in short positions against U.S. stocks, a move that signals a belief the market is headed for a precipitous crash. Throughout January, investors placed 10 times more bets on American stocks falling than on their continued rise, a staggering shift that reflects growing unease over Wall Street's future under Trump's leadership. Okay, so in January, Wall Street got short deep against the U.S. markets. Now I'm going to show you guys how they did it. On your screen is the daily for the IXIC, or the NASDAQ. That white arrow on the left, that's a new all-time high for the NASDAQ, December 16th. The arrow to its right points to another top, January 24th, a Friday. That was the end of the World Economic Forum meeting in Davos. So what were they talking about in Davos all week? Crypto, AI, and DeepSeek. Must-know trends from Davos 2025. Now, I have to be honest with you. I never heard of this Chinese AI company until after it destroyed the tech market. But it turns out, over at the WEF meeting, they were talking about it all week. It was the belle of the ball, apparently. Now, on Monday, January 27th, the market didn't know what hit it. That was the day of the DeepSeek sell-off. You see, if you're going to take down the market, you have to take down the Mag 7. It's holding it up. To take down the Mag 7, you have to punch Nvidia in the face. It's really that simple. Look at that gap down. So now let me put all this shit in order for you guys. January 4th. Short sellers are down 181 billion in 2024 mark-to-market losses, right? So January 4th. January 20th to the 24th, that is the World Economic Forum's annual meeting in Davos. What are they talking about? Trump and DeepSeek, right? Okay, what did we learn about January? Hedge funds' massive bet on stock market crash raises alarm for 401ks and risks ire of Trump. So they've got huge losses. They go to this meeting. We're talking about Trump. We're talking about DeepSeek. We get short big in January. And on January 27th, DeepSeek sparks AI stock sell-off. Nvidia posts record market cap loss. Front to back, top to bottom, that's how it happened, guys. So on the day all this nonsense started, January 27th, okay, that was when we had that shocking sell-off, and all the volatility since then, it started on January 27th. Reuters comes out with this explanation. Same day, hedge funds were pausing U.S. AI bets as DeepSeek emerged, says Goldman. Hedge funds reduced tech stock bets amid Chinese AI competition. Goldman Sachs notes hedge funds' reluctance to invest in U.S. tech sector. DeepSeek challenges U.S. AI dominance, raising investor concerns. Hedge funds were already waiting to see if a U.S.-fostered, homegrown AI boom would continue as China's new A model was emerging to challenge U.S. dominance in the sector, a Goldman Sachs note said. NASDAQ futures slumped and tech shares slid on Monday as the swelling popularity of a Chinese discount AI model that none of us ever heard of until that day wobbled investors' faith in the probability of what the U.S. has to offer. Last week, hedge funds fled their bets on tech stocks. That's when they were in Davos, right? A Goldman Sachs note from Friday and seen by Reuters Monday showed the data from Goldman's prime brokerage desk covered data from January 17th to the 24th. Yeah, that covers the meeting in Davos as well. Bank prime brokerage desks lend to hedge funds and see their trading flows. Hedge funds also continue to sell U.S. stocks adjacent to the tech industry, including those companies which would serve as its infrastructure. These power and energy-related companies would benefit from any AI advancements, from data centers fueling AI models to those building charging stations for electric vehicles, said Goldman. So Goldman tactfully mentions the hedgies bailing on tech the week before, right? But not shorting the shit out of it. After all, these funds are their customers. So I'm going to wrap this episode with this. January 21st, Chinese Vice Premier Ding Zhujiang Guangdong met with global finance and business leaders, including Blackstone CEO Steve Schwarzman. Hey, those are the guys behind Antara. Bridgewater Associates founder Ray Dalio and JP Morgan CEO Jamie Dimon during a private lunch in Davos on Tuesday. The lunch, hosted by World Economic Forum founder Klaus Schwab, was also attended by BlackRock CEO Larry Fink, Standard Chartered CEO Bill Winters, and Visa CEO Ryan McInerney. Yeah, all these guys love Donald Trump, right? Look, guys, I'm just going to come out and say it. The Chinese, the primes, the hedgies all got together and figured out a way to reverse the hedgy losses for 2024 and make a killing, skunking the U.S. markets, all with the added benefit of teaching Donald Trump a lesson. And they use DeepSeek AI to do it. If you don't see it, so be it. But everything has sucked in the markets and crypto ever since. Hey, I want to thank you for watching, and please remember to hit the like button after this slide if you enjoyed the presentation. Subscribe to the channel and set the alert so you're notified when I have new information to share. See you at the bell.